In this lecture, we're going to do a little area analysis, and I've chosen Bradford as my specimen location, and here's why. Daily Mail have an unhelpful article just saying these are the big areas on hotspots. What are the great hotspots that you should pick and potentially invest in? And they say that Bradford is number 11 on the overall hotspot scale. So let's look into that in more detail and just see what's going on and how we can interpret that data. The first thing is that, as you know, I've got MSOA data, and as you know from previous lectures, and this data is here. So I'm going to quickly talk about this and then we'll get into the area analysis. So the first question is, which area do you analyze and where do you start? And with that in mind, I built this spreadsheet, which is shared in the resources section, and it's based on MSOA data. It's inflation adjusted capital growth data, which I've talked about and explained in previous lectures. And in order to make this useful, I've taken this data from the pivot, because pivot tables are a bit tricky, and I've just put it here, and I've put it in a filter table. And then I've filtered out all areas where the average house price, or the median house price, should I say, or to be specific, the average of the median house price, because it is pivot table data, is below £210,000. So we assume, therefore, there will be property that is within a suitable price range, suitable for buy-to-let. And then what I've done is I've got the different parts of the cycle. So in very simple terms, how the area did in a downturn. So how the area did in the upcycle from 2003 to 8, the last boom cycle that we're now in again, how it did in the crash, how it did long term from the crash to date, how it's done from the bottom of the market to date, and how it's done more recently. Then I've created a simple algorithm, which is using a ranking algorithm. There you go, rank. And I've averaged the rank. And so I've got my best to worst areas overall. Now, the reason I quite like this is because it's relatively simple. It gives you local authority areas. There are about 360 of them in the country, so it's fairly granular, or granular enough for you to pick out areas of interest and then dig in deeper. And what I also like about this is that it shows which areas have done the best in all parts of the cycle. So it then looks at the long-term growth story, which is important, because if you're buying a property, I assume you're going to hold on to it for a long time. And generally speaking, areas tend to trend. So if they're trending upwards, they keep on trending for a long time upwards, unless they get too expensive or they become too unaffordable. And conversely, they trend downwards as well. And so anyway, this is a really easy way of identifying areas of special interest for you to investigate in more depth. And based on my anecdotal evidence, I think these are all pretty good areas to look at. There are lots of other caveats like demographics and so on, which we talked about in other lectures. But anyway, that from a capital growth point of view, here's a good place to start. Now, the next thing is the mapping. Now, I'm concentrating on Bradford, mainly because, as I say, Daily Mail says it's doing really well. So, okay, what's the real story? And the answer is, when you look at the more recent capital growth, then we can see that the outlying areas are doing fine, but the inner areas not so. Now, if you remember, there's more to the story than capital growth. It's also important to factor in demographics. But generally speaking, if there are issues with demographics, there are issues with capital growth. That's how they most often correlate. And for the sake of brevity, if we look at the long-term story from peak of market to date, we can see that basically Bradford has done very badly relative to other cities. So in other words, the long-term growth story is very poor. If you had bought here in 2008, you paid 87,000. Today, the median house price is 60. Factor in inflation, you've lost half of your purchasing power, half of the true value of that property over those years. So from that point of view, this is not good news. And as you know from previous lectures where we've looked at places like Manchester and so on, it's not a universal story. And the other thing you'll notice is that these things like growth and demographics, they're all kind of interlinked. And that's why I don't segregate them too much in this lecture series, because they're all part of the overall story, which is assessing an area and making sense of it. Now, as you also know from previous lectures, it's very difficult for me to share this system because it'll just crash if it has too many users on it. But you'll be able to download the screen grabs, and then you can start to compare different areas. And as you'll know from my previous section in this video where I show you the spreadsheet, as a general rule of thumb, it's best to look at the areas that just kind of work overall. Now, with that in mind, there'll be a screen grab where I've set up certain filters, and you can see those areas which have done well. But also, as ever, it's very important to look at everything in context. So there will be little spots in Bradford that are strong, but overall Bradford is weak on a capital growth. It's with its capital growth story. So it's like the key is to cross-reference lots of different sources of information and work from there. Now, PropertyData, what I've done here is I've got an area report for Bradford, and they say that the market's going up. Overall, yes, that is the case. However, that is only a 5-year story. Now, if you want to zero into, say, BD8, which is some just a general, just a random Bradford postcode, whereas BD8, and it is BD18. Where's BD8? There it is here. Right, so we can look at the growth story for BD8, obviously, and we can see that it went up for a bit and now it's in decline again. But that's again reiterating my point. If you look at things in isolation, it's unhelpful. So it's very important to look at the whole story. And the rule of thumb with growth is that if there's some demographic issue, then that usually explains why there's poor capital growth in a given area. And then you, at a very high level, you've got this issue with cities just being economically dysfunctional. And I would say that Liverpool is sadly one of those kind of examples where long term, if we use the 18 to 21 data and we compare it to Manchester, essentially Manchester is a lot more kind of red, which means it's hot, and a lot more green here, which means it's cool. So when you're looking for growth, start with the overall area and then kind of zero in to specific locations. If you see a demographic issue, well, that's probably an avoid, and that manifests itself in capital decline. Thank you very much.